Welcome back to Trading 360. It's time for the 360 round, focusing on this morning's inflation data, which actually slowed, and it's at the slowest pace in 2 years. So that provided a cooling, a little bit of a relief here. Let's start our discussion here with Sophia Baig, economist, Morning Consult. Thank you for being with us. What were your thoughts when you saw a print that was cooler? I mean, I think it was somewhat translated.
My first thoughts was this was great news because inflation came in lower than expectations, not just for that headline number, but also for the core portion of CPI, which excludes those volatile food and energy categories. So that came in lower than expected. Both the headline and the core numbers were the lowest in over 2 years, since 2021. And when you go down deeper, monthly inflation from core goods, housing, and super core services, which are all categories the Fed watches closely, all declined from the previous month. So it's overall great news.
Look, it was the smallest increase since March of 2021, and a far cry from the 9.1% we saw in June of 2022. But you still have some things that are running hot, including motor vehicle repair, frozen vegetables, pet food, candy, insurance, bread. There were still some things that are still very inflationary and above the 10% mark. So the likelihood of the Fed raising rates again and again?
So the likelihood of the Fed raising rates in July is pretty high. They've made it very clear in the past few weeks that they're taking a hawkish approach to the rate hikes in July. So that should probably still happen, although it's unclear what will happen for the rest of the year because inflation is moving in the right direction. As you mentioned, though, there are categories where inflation is still running hot, like car repairs, maintenance, insurance, things like that, still fall out from the pandemic and supply chain disruptions as car prices have been very high. It's more expensive to repair them, et cetera. But going into the rest of the year, inflation is still too high for the Fed to claim victory. This is good news as we're moving in the right direction, closer to their 2% target, but we're still at 3%, which is too high. And it's important to keep in mind that it might be harder to get from 3% to 2%, even though it was so high at 8%, 9%. In the past few years, it might be harder to get it down even farther as inflation expectations become more entrenched by the consumer.
Sure. A quick thought on recession.
On recession, yeah, that's the $1 million question.
How likely do you think that is or is not?
Well, this is good news, and it shows that the possibility of a soft landing, it's still a possibility because inflation is coming down. The labor market is still strong. I guess the big question is, will consumer spending be able to keep up with the pace that it's been at? At Morning Consult, our demand indicators for everything besides housing are flashing red signals. Folks are becoming more price sensitive, which means that they're more likely to walk away from purchases that have a higher than expected price. So we see demand cooling and excess savings have been draining down as well. And it's unclear if consumer spending will be able to keep up the pace to prop up the economy going forward. So while inflation is bringing good news, like if we were going to have a soft landing, this would be what would happen. It all kind of depends on if the consumer can sustain the spending and prop up the economy going.
And joining our conversation, Rebecca Walzer, president of Walser Wealth Management. Thank you for being here.
With you, Nicole. Thank you for having me
in person. Your thoughts on this print? Obviously, it was cooler than expected, but I think a lot of people were thinking that, right?
Yeah, I think that while we saw the PCE come down, obviously from May, 3 to 3.8. So we thought that we'd be somewhere in the threes, and obviously coming right in at 3 is lower than the 3.1 consensus.
Right, and also we're basically at the slowest pace in 2 years.
2 years.
And we're well off that 9%. But there are still things that are running hot.
Well, Nicole, the job market and the labor market, and that's the problem. We've got still almost close, just under 10 million. We did drop from over 10 million to just under 10 million jobs available. And if you look at the ADP report, you can see 200,000 jobs basically were created by small businesses. So we know that the labor market is still hot, and that's going to keep giving us wage increases because that has to entice people to come back. Wage increases means we're going to keep seeing inflation. I don't think we're not going to get out of July without a hike.
Yeah, I mean, likely to see at least one hike, probably two hikes. And Sophia, when you think about these hikes that are more likely than not, you know, we had on Jan Rogers-Niffen earlier, and he thought that the holiday season, for example, that people would be spending.
Yeah, there's definitely seasonal trends with spending. So we're seeing that also in the summer. So spending is being propped up by vacation related services and things like that. The holidays, it's another time of the year where folks start to spend more. So that could prop up spending, and that could create more demand and keep the heat going in the economy, which could lead to more rate hikes.
Yeah, I mean, what are your thoughts on what the consumer may or may not do?
Well, I think that this is a very bifurcated economy. You know, Nicole, the haves still have and they're still spending, and luxury is still, you know, retail is obviously coming down. We see that. But, you know, there's other people that are already living in a recession. They've got two jobs. They're really at the kitchen table and having a hard time with how maybe they can't afford a house now because the rates are too high. There's a lot of people that are feeling the pain in this economy. So I don't want to just disregard them and say everything is fixed and everything's fine. I still think Powell, based on his comments that he made abroad, that he has consensus that will be more in the 6% somewhere in terminal range. So I do still think that we've got two hikes coming this year, unless something crazy happens, Nicole.
And look, there's some really key things here. Jackson Hole, everybody's saying Jackson Hole will be more important than ever. Also the comps, because they're thrown off a little bit because energy was more expensive last year.
Exactly.
Gasoline prices have come down significantly. I know we look at the core, but final thoughts here.
Right. I think that people just have to be braced for still a mixed bag of results. Some good news, bad news, good news, bad news, and we're going to keep slogging through it. But this is a step in the right direction.
Yeah, without a doubt. It's great to have you both on. I really appreciate it. Rebecca Walzer, president of Walser Wealth Management, and Sophia Bake of Morning Consult. Thank you both.